It's 2 hours before the open on Thursday, October 7th. Hello, traders. I wanted to do a video before the open again because we have got volatile market conditions. Things are changing rapidly. That's why I've been saying stick with day trading. Do not swing trade. That could be changing a little bit, and I'll tell you why in just a second. Let's review the market. Yesterday, I had mentioned to you to buy VXX. VXX is something that would benefit from a decline in the market because option implied volatilities would shoot higher. More uncertainty, option premiums start to expand, VXX would go up. So let's take a look at that 5-minute chart. Yesterday on the open, if you would have purchased VXX, you were getting in somewhere around this 27 level approximately. And you can see how it closed at 26.22. It will be lower this morning also because we've got a big rally taking place overnight in the futures. So exit the VXX trade. Now, if you are long a lot of stock and you want some protection, VXX is not a bad instrument to use for hedging. But the nature of the market changed yesterday in one key bar, and that's what I'm going to review. Let's first take a look at SPY on a longer term basis to see how things were unfolding. Then we'll drill down into that key bar and how we knew things were changing. So I've been referencing heavier selling than normal, below major moving average, which is the 50-day at first, and now the 100-day. So yesterday's price action looked like this when we came into the day. We had two closes firmly below the 100-day moving average. Typically, the market hadn't even gotten down to the 100-day moving average. This is the first time in a year that we've seen that. The 50-day moving average has been the support level, and we don't even touch it for more than a day, and then we're back off to the races. This is a sign of very, very strong buying. Now, that started to change in recent weeks, and you can see this is about 2 weeks worth of steady, heavy selling pressure. We get this big gap down, a rally off of the 100-day moving average. Then we get a bear flag formation where we have another leg lower. Well, this support level has been pretty sticky in here recently, meaning that we tested it, tested it, tested it, tested it. So it appeared that support was forming. However, the market was not able to get above that 100-day moving average. That told me that the selling pressure was heavy. Going into yesterday, we had a big drop of about 40 S&P points. So now we're going to take a look at that, and that is what I was leaning on when I had mentioned buying VXX calls. I felt that if we took out this low right here, we would see another big leg lower. And I also felt that option implied volatilities had not expanded appropriately given the amount of selling that we have already seen in the last month. And those dark clouds that I've referenced, they're still there. These are longer term macro issues. Energy supply constraints, higher inflation because of that energy constraint. When you have fuel costs rising, it impacts everything. That's one of the largest input costs that manufacturers have. Transportation, everything is impacted by higher oil costs. And that higher oil cost is not related to an increase in demand, it is constrained supply. So you get the woes of higher inflation without getting the benefit of economic expansion. That's not a good mix. We also have credit concerns in China. There are a number of issues that I highlight in my pre-open market comments each day. Those issues are still looming. I'd also mentioned to you that somewhere in here we can expect a bounce because Congress is going to avert a government shutdown. Well, Senate Minority Leader Mitch McConnell yesterday floated an idea that we would raise the debt ceiling. Well, that is a temporary fix, but I had mentioned when that cloud parts that we would probably see a relief rally. That's what's happening overnight. So this was coming to a head because this has to be resolved by the end of the week. Let's take a look at the 5-minute chart though and see how we could tell that things were changing dramatically. And the theme hasn't changed for me in my last 2 months. I've said you've got to keep your swing trades to a minimum. Conditions are changing very, very rapidly, and you've got to keep your trades short term. Keep it to day trading, maybe a handful of overnight positions. So here's what we've got yesterday. We've got this market drop right here. We had a nice long green candle. Then all of a sudden we tried to get into this gap right here. We had a couple of tiny bodied green candles here. And I had mentioned to members that this was a sign of resistance, that these candles were getting smaller. As soon as we got this long red candle forming right in here and we took out the low of this green candle, the open, I knew that we had a chance for the drop that I was looking for. Mind you, conditions were already weak going into the open. So we were short in here, and I was starting to pound my chest prematurely, saying, we've got a really nice trade on. I love this. This is 4 red bars stacked consecutively with very little overlap. When you get this type of pattern, it means that the selling momentum is very, very heavy, and that at very least, you should see a bottoming process that takes a long time until buyers finally have the confidence to come in and run the market the other way. But they want to make sure that that support is there. Now, even if the market had come down and spent some time here, we would have time to adjust our position and get out. Typically, you'll get maybe a bar like this. You don't want to see the open of this red bar retraced or given back, but that is what happened. And that got me a little bit concerned that we had 2 long green candles like this after a series of red stack candles like that. These are extremely unusual to have 2 long green candles that retrace this far into the move that suddenly. But we got a long red bar. It was almost a bearish engulfing candle that stripped this candle away. So at this point, I'm not overly concerned, but I am on high alert because I did not like these 2 green candles right here. When this candle took out the open from this opening red candle and got through that close of that green candle right in here, this is where I went, uh-oh, this is not a good move for us. So we started taking profits in here, and we were able to take profits on that short position. This candle here, this one little candle, is what I call a key bar. And you can see how it stripped out all of these losses that had been made earlier. Now, even though this was a key bar, we know the selling pressure has been pretty heavy in recent days. The market tried to retrace more than half of that green candle, but you can see that's where the support was forming, tails under body, and then off we go. Once we had this relief rally in here, then we were starting to see traction on the upside, and this support level 1, 2, 3, 4, 5, 6 now is confirmed instead of being violated. And that's how things were looking yesterday morning. It looked like that support was going to be violated and like the 200-day moving average could be tested. You can see how we closed above the 100-day moving average. So today, this 40-point rally we're actually positioned for. Yesterday I bought futures on the close. I'd mentioned it in my chat room. This rally is probably going to test this downward sloping trend line, and that's where we need to watch to see what happens. So I'm going to click an alert line, and I'm going to drop that so that you can see where it comes into play right here around the 438 level, and I think that's the level that we're going to challenge this morning. If we're able to get above this downward sloping trend line, I think buyers are going to get very aggressive, and we're going to probably see some follow through buying into earnings season. So for right now, the next couple of days, I like what I see. I think the market's got a full head of steam. I think we're going to continue to go higher. I think you can take long positions. I think you can hold them for a couple of days. Is this going to be a year-end rally? That's what asset managers are going to be looking for. They want to buy stocks into year-end because typically we have nice strength. Everyone likes to open their statements at the end of the year and see that they're marking on the high. Asset managers love it too because they're percentage of assets under management. They make bigger bonuses. So there is a tendency for the market to rally into year end, and everybody is looking to buy that dip in October that helps them get even more long exposure. So that's what I see unfolding. I don't want to tell you that the market is off to the races and it's going to rally and it's never going to look back. I don't know that that's the case. I'm not getting the feeling right now, and that's what I'm going to describe now. Then we're going to take a look at a couple of trades that I think are setting up very nicely, and we'll conclude the video with that. So today, watch this downward sloping trend line at about SPY 438. If we can close above it, there's a very good chance that we are going to also rally on Friday. So there'd be an opportunity for you to hold overnight long positions today. So here's what I don't like. Usually when you get these big washouts like this, you're going to get an air pocket in there and you're going to rally like there's no tomorrow into the close, and that will leave a bullish hammer. We didn't really see that. We just kind of saw testing, 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 testing. And when the market wasn't able to take out this low, they're like, okay, well, that's enough support for me. Let's run it the other way. I don't know when the news of Mitch McConnell's suggestion that they just raise the debt ceiling, I don't know when that was floated, but I will bet you that somebody knew of that news right here yesterday, because that is some pretty big buying. And we don't really care that we don't have the news. All we need is this candle. And that's why we trade price and not news, because this told us that the rest of the day will be bullish. Once we were forming support, we knew that we needed to trade from the long side yesterday. I'm sorry I can't do these videos constantly throughout the course of the day, so I can't adjust to these types of price movements. So you have to go with the information that you have at the beginning of the day. Right now, things look very good. So I was looking for a big washout, a bullish hammer. That would have given me an excellent entry point for year end at a lower price level, and then we would have had a rally off of that. This is less interesting to me because I still feel that there is some downside that may be tested. May not happen even this year, but if we do not get a big year-end rally that challenges the high right here, that to me would also be a warning sign, because typically you are going to close pretty close to the high of the year. So if we close somewhere in the middle of this trading range between the high and the low, somewhere in here, that I would see as actually being fairly bearish for 2022. So credit concerns, if they start to escalate, I'm hearing that there are a couple of other property development companies in China that are on the ropes. It's something we've got to watch very, very closely. Energy, putting upward pressure on inflation. That's going to put upward pressure on interest rates. Let's take a look at TLT. TLT actually was pretty flat yesterday, but you can see how it has been closing below that 200-day moving average. That means that bonds are likely to continue to go down. Bonds go down, interest rates go up. Higher interest rates, not good for the market. So we've got that dark cloud also looming. As I mentioned yesterday, right now we are approaching earnings season. There have been more analyst downgrades than upgrades. That's not good. S&P 500 trading at its highest forward PE since the tech bubble in the year 2000. All the things that I've just mentioned in the last 2 minutes, they haven't changed. They haven't gone away. Those issues are still there, and they are big issues. Could this relief rally push us higher for a few days? Yes, I believe that they can, but I don't think that we're going to have the strength to challenge the high. That's just an opinion right now. All I care about is what is in front of me and the price action that I can trade for the next few days. So longer term, these are some things for you that if you're a longer term investor or swing trader that you'll be wanting to watch. How high can this rally actually go before it runs out of steam? And keep an eye on those things that I've just mentioned. So let's take a look at what we've got in terms of the market right now and some stocks that might perform well for the course of the next couple of days. I'm going into my heavy buying list, and I'm just going to go through this list, and we're going to take a look at the daily chart, and then we're going to drill down. AFI. Super, super strong stock. Right in here, they announce a massive deal with Google. Boom, the stock just jumps higher. Well, stock gave back some of those gains and started to fill in a little bit of that gap until earnings came out. Bam, another massive rally. So again, the stock is trying to digest these gains because it's made a huge move from here to here, starts to digest those gains, consolidating, pulling back with a weak market, and then we get this long candle yesterday. This is news that Target is going to start using their system. So it's had fantastic fundamental news, earnings, new contracts that are signed. AFRM to me looks like a good longer term play. I think this stock is going to continue to move higher. Would I buy it right here? I would watch it today, watch for relative strength. If we put up the 5-minute chart, it was just gangbuster strong yesterday. Look at these green candles stacked. This is heavy, heavy buying. So this is the big boys, the smart money loading up in here. Are they going to chase up in here? You may see some retracement off of big gains like that, but I would be watching and waiting for the stock to form support and then to see some relative strength relative to the market. We have the 1 OSI indicator that we use for that. If the orange line is above 0, then you know that it's time to start taking a position in it. Right now, you can see it's a little bit below 0 because of that pullback right there. I like AFRM. I think that you can sell out of the money bullish put spreads on this. Don't go out too far in time. You'd love to sell something down here around the 110 level. I don't know that there's going to be much premium in there. There might be. After moves like this, option implied volatility can get very, very high. Where else might I consider it? Downward sloping trend line breach to the upside. The halfway point of this long green candle, somewhere around that 120 level, that should also be support. That should be defended. So I think that using a 120 strike could also work, but it'd be fairly aggressive because this stock does make big moves. Let's continue to go down. Roku, decent looking coin, choppy all over the place, not a fan. DOCU. I do like the fact that it's been able to get through this downward sloping trend line right here. You can see it visually. You can see how it's bounced off the 200-day moving average. It's going to try and get through that 100-day moving average. If it gets through the 100-day moving average, which is $270, I like it because then it's got a chance at minimum to get to the 50-day and perhaps even higher. Let's take a look at that 30-minute chart. I'll show you what I like here. I'm going to overlay the S&P because it's a little bit easier to see. You can see how the market dropped dramatically right in here. The stock held up pretty well. Yes, it gave up some money right in here on the open, but look what happened during this down leg in the S&P 500 right here. Stock held well for 2 days while the market was getting pummeled. That's a sign that there are some buyers out there. So we get this big drop in here. Yes, the stock did drop with the market, but you can see how it instantly rebounded. We get this sell-off right here in the market that just happened yesterday on the open. What did the stock do? It was rallying before the market had even found that low. It was starting to march higher. I think DOCU has got some buyers in it. I like it. I think this is a stock that would be a good long. You can look to sell an out of the money bullish put spread short term, keying off that 247.50 level. Wait for it to get to that 100-day moving average if you're looking to just get long and swing the trade, maybe do a call debit spread for a few days. So that's what I'd be looking at there. Net, pretty volatile moves in here. These are two nice long green candles stacked, very little overlap. So it looks good, but I'm not as interested because of these wild swings just recently. MRVL, fairly choppy stock. I do like this downward sloping trend line that was breached. I love the fact that it was able to get through the 50-day. It had really big volume yesterday, which tells me that on that spike right there, there is news, and that news fueled the move the rest of the day. So we had a lot of traders that were in on it on that big green bar. That was a nice play also. What would I do with Marvel here? You want to watch to make sure that it is able to get through this resistance level. If it is, we've got that big volume. We know that there's news surrounding it. Make sure you check the news. If it's able to hold that level and keep grinding higher today, Yeah, I think Marvel could be good because it's going to be making a new relative high and it'll have that strong market tailwind to fuel it higher. So I did like that move as well. Pepsi made a really big move. You can see it tends not to make big moves like that, but it had earnings yesterday before the open and it absolutely blew through that 100-day moving average and that downward sloping trend line breached to the upside. Watch that 50-day in there. If it can poke above it and you see sustained buying in it today, you can get long. Look at that, March higher, beautiful. But this is also market related. There's a breakout on the S&P 500 and look what Pepsi does. Then it just starts marching very, very nicely. So it does have a pretty high correlation to the market. It's going to follow the market. Going to continue to go down and see if there's anything else that I like. I would avoid the cryptocurrencies. They tend to be very bouncy. They look great 1 minute, they don't look so good the next. Take a look at Microsoft and Nvidia. And Microsoft, you can see how Microsoft has actually been able to hold up very, very well. And it's actually into this little gap right in here. I do like Microsoft. I think Microsoft is one of the stronger tech giants. So I do like that. We'll take a look at that 5 minute chart, see how the stock performed yesterday. You can see market down hard. Look at Microsoft. Beautiful relative strength. So before the market had even found support, Microsoft was starting to march higher. Obviously, it's in the S&P 500, so when the market starts to rebound, it's going to move higher. But relative to tech, Microsoft has actually performed well. So let's put up Microsoft and then overlay the QQQ so that we can see specifically how Microsoft has performed relative to QQQ. And you can see during this big down leg here in QQQ, what did Microsoft do? It did not participate in that downside. It did initially, and it stayed right there while tech stocks were still searching for support. Now it's through this horizontal resistance level right here. Nice close on the high. If it gets above the 50-day moving average today, which I certainly expect it to, probably right on the open, watch for relative strength. Make sure you got that orange line above zero, and you should have a nice opportunity to get long Microsoft and stay long Microsoft. I've rambled a little bit too long. I want to keep this short so that I can get the video out. A couple of key points that I want to continue to drill home. One is the whole notion of having a key bar and sticking to very short term trades. We've got a lot of issues that still have to be resolved, and we can see that downward sloping trend line is still intact. We get through that, great. We should have a couple of really nice days in the market. Some resistance at the 50-day, that'll be your next resistance level to watch. If we get long green candle, long green candle, long green candle, we're going to rally up to the high. That tells me that there's absolutely strong, strong buying. If we get a long green candle through this downward sloping trend line and then the candles start to get very tiny bodied as we get up to that 50-day moving average, then we know that resistance is starting to build and that this was just a relief rally based on the debt ceiling being extended and that the price action could start to flatten out and we could start to roll over and have another leg lower. That would be very unusual the last 2.5 months of the year. There's just an enormous amount of buying pressure heading into year end. So when you don't get that year-end rally, when you don't close on the high of the market, for those of you who are longer-term traders, if you're looking at the market in November and we're past Thanksgiving, we're into December, and we're still somewhere here in the middle of the trading range around this SPY 444 level, that should be a gigantic red flag to you that, hey, this should have been excellent strength going right up to the all-time high. When that doesn't happen, that tells you that the selling pressure is mounting and some of those macro issues that I've discussed are starting to weigh on the market. Thanks for watching. Good luck with your trading. Stay fluid. This is a key bar yesterday. Conditions are changing very, very rapidly. This one bar right here was a 25-point S&P 500 move in 5 minutes. When I get that type of move, you have to pay attention because a bar of that magnitude is going to set the tone for the rest of the day. They are very rare. You don't see those very often. Thanks so much. Good luck with your trading.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.